What's up, guys? Welcome back to another episode. And I think you're going to really, really enjoy today's episode. The reason I say that is because I believe we're all hardwired to find great inspiration from a comeback story. Now, you know what I mean by comeback story. The hero of the story overcomes a series of setbacks and obstacles and challenges and overcomes it, gets to the other side and rebuilds his life or his business or whatever it might be. Now, I know I've shared my own roller coaster ride that took place after the 2008 crash, and that was a pretty tough couple of years. And one of the lessons I learned from that is you just cannot dwell on the past. You know, I spent a little bit of time looking back and feeling regretful, feeling like it was somebody else's fault. And I think you just have to accept it, leave it behind, and then focus forward. How are you going to overcome? What are you going to do? And just get focused and get to work. So my guest today has overcome a challenge that I would say is next level, because we're not talking about a bankruptcy. We're not talking about a financial setback. We're talking about incarceration. Yes, my guest today spent 3 years behind bars. Now, not only did he come out of that, and, you know, we won't call that a minor obstacle. That is way above a bankruptcy or anything like that. Not only has he come from that, but he has managed to build a business that is now seeing some serious success. So much so that he recently acquired a property on a certain beach in Malibu. And the former owner of this property is none other than the rapper Kanye West. So this episode is going to teach you that no matter what mistakes you've made in life, those challenges are just there to test you. And as long as you've got the focus and as long as you've got the grit and determination, you can get to the other side and you can build a positive future. So without further ado, my conversation with Bo Belmont. Bo Belmont, welcome to the podcast.
Thank you, Gavin. I appreciate you having me as a guest here. Thank you.
So, Bo, you're based in sunny California, am I correct?
Yep, beautiful Newport Beach.
Oh, wow, beautiful. And tell me this, my geography around California used to be better than it is today. Were you in any way impacted by all the fires that were a few months ago?
So, not personally, I don't live near them, about an hour away, but we do have a lot of real estate that we own that was around that, especially Malibu.
Okay, wow. Yeah. I can remember seeing some of the imagery, and it's like it's going to take, it must be like, do you have any idea like the time frame that's going to take to recover? It must be a decade or something of construction there.
Many, many, many years. If you know anything about California, we have a lot of red tape. And along with that red tape comes dollar figures. So, the California and in our system is monetizing it. So, however long they can drag it out, they will.
Well, the thing is you'd wonder like how long can they drag it out when there's tens of thousands of homes involved and all those people are, displaced, living out of where? Like out of hotel accommodation or something like that. I mean, it just amazes me that they would not have some kind of a amnesty maybe or something that would allow people to kind of speed the process up for in these circumstances.
Yeah, they've talked about expediting plans, but I haven't seen any of that quite yet. There's some remediation work, just as far as like the toxicity in the soil, and then these areas were in the coastal area, so there's a coastal commission that you have to deal with, which is probably the longest aspect of rebuilding. So they're going to be there for years. A lot of these properties are for sale. There's a lot of developers that are buying these properties, but now they're stuck with them because they can't do anything with them. So it's a lot of talk, but not a lot of action, actually.
It'll be interesting to see what it does to the market, especially given you're in the market. Does it push up prices or does it make it more difficult?
Yeah, so Well, there's a couple different ways to answer this. So, number one, there's supply and demand. If you lose 10,000 homes, well, then there's less supply and more demand. So the rental market has picked up, and there's been some price gouging. A lot of people are getting in trouble for that. So the rental market picked up. But these people are high net worth individuals. If they lived in the Palisades or Malibu, they make millions of dollars or have millions of dollars, and they don't want to just rent for the rest of their lives. So, they're waiting for their insurance payouts. A lot of them, that's being delayed quite a bit. So, we'll see in the next year or two for the market to pick back up. But for right now, it really hasn't impacted the overall seller's market right now. We haven't seen prices pick up at all. It's still pretty, everybody, I tell everybody, Gavin, people think it's a buyer's market and people think it's a seller's market. So sellers think that their house is worth a lot. Buyers want a deal. And so, it's they're button heads right now.
Yeah, I can imagine. Well, we're going to get into a little bit of that, and specifically, actually, the big question that I'm sure all our listeners are going to love to hear about is you purchased the Kanye West Malibu Beach mansion, and so we'll definitely get into that in a little bit more detail. But let me just turn back the clock a little bit and talk about Bo Belmont coming out of university, or like how did you start your career off, and like what got you into real estate?
Sure. So had a bit of family influence. My mom was a real estate broker and used to bring me around to developer sites. I would go see houses being built. I really liked architecture. I didn't really want to swing a hammer, but I liked the aspect of building homes and selling them to new families and just developing area or real estate in general. And so that kind of planted the seed. And then right out of college, I started as a mortgage broker at a place called AmeriQuest Mortgage. And this was in the early 2000s when it was known as the Wild West. And if you had a heartbeat, you got a loan. And it was an expensive loan. And we sold a lot of those. And then the market crashed, as we both know, 2007, 2008. I had to pivot to something else. I was a subprime lender. That became a bad word. And so I then started doing something that was foreign to a lot of folks, which was buying distressed properties, REOs, real estate owned, bank owned properties, fixing them up and selling them. And I was taken under the wing by a friend of mine who was doing it, and not many other people were. And I was able to pick up properties for pennies on the dollar. This was 2008. I flipped my first home. Okay,
so that was like right in the middle of distress. Yeah, everybody's like jumping out of windows and stuff. Yeah.
Oh, yeah, absolutely. So just to give you a kind of a reference here, I had just done a loan for somebody on a street. It was called Scotland Drive in a town called Antelope near Sacramento, California. And I had just done a loan for over $500,000. And a couple houses down, I was now able to buy the same model match home for under $200,000. Wow. And it needed some work, but I realized that there was a huge gap there on what it could be at the top of the market and what it was at the bottom. So I knew if I were to hit somewhere in the middle and sell this product for a deal, because people were used to these $500,000, $600,000 values. Now, back then in this area, that was a lot of money. So if I was able to buy this home, improve it, and sell it for, let's say, under $300,000, they would feel like they got a good deal. And that method proved to be accurate, and I was able to sell it quickly. It was the most beautiful home on the street. It wasn't when I bought it, but I was able to prove that even in a recession or in a downturn market, you're still able to sell a product.
People still love a deal as long as they can put the money together, yeah.
Exactly. They have to feel like, and it depends on the market. They have to feel like they got a good deal. That's why I was referring to this market right now. You have buyers saying, I want a deal, and you have sellers saying, my house is worth a lot. So that's what makes this market difficult right now. Nobody knows which direction it's going.
And where would you put your money on it, the direction it's going? I'm curious because I am involved in commercial real estate, and I have I manage a large commercial office park, and we have a lot of big corporations operating out of our park, like Oracle and Google and stuff. And the problem is that obviously now it's a little bit like subprime. Like offices are seen as kind of radioactive, pretty much. And so you suddenly see, wow, it's in a really difficult state. And a lot of the blame I mean, apart from the COVID crisis and the fact that people now do a lot of work from home and stuff, but in recent times, a lot of people are saying that the tariffs and all of this has created this kind of economic uncertainty. And now, of course, you've got Iran and the situation over there, and could oil prices increase and all that? So where would your, crystal ball, what would you think that is around, 12 months from now? What are we looking at?
As far as tariffs and like the global impact of Iran and what's going on right now, I don't see that necessarily impacting the residential market right now. What I see mostly impacting the residential market is interest rates. Right now, a lot of buyers have it in their mind that if they wait long enough, they're going to see the rates that they saw during COVID, 2-3%. So they have that kind of in their mindset that they're going to achieve that. And so they're riding the fence and they're not jumping off and getting into the buyer's pool. So the way I see it is, it's in Jerome Powell's hands right now. If he's going to make an adjustment, which, we all know that our president is trying to push him in that direction. And he's an influential man. So hopefully he can make that happen. But if interest rates are able to drop, let's say anywhere near 5% or even below sub 5%, then we're going to see a frenzy. We will see the market go ahead and increase incredibly. It's still affordable. The people are, especially down here in Southern California, they're saying, well, we're going to leave California because it's so expensive. True, a lot of people are moving out of California, but for every one that leaves, 4 move here.
Really?
And So I was speaking with somebody who works with the Department of Transportation as an executive, and they verified these numbers. So for every one person that leaves, we have 4 with a higher net worth moving back in here. So that's great for the market. I don't see it taking a decline anytime soon. Now, there does come a time where wages and values of homes don't align. But right now, we're not at that pinnacle. So I would say, once we reach, it's about $1.1 million median value in California is when we will see that downfall. Because typically what happens in California in any ways, and as California goes, so does the rest of the country, when we double the previous declines median value. So just to give you some frame of reference, median value when we declined in 2008, now there was a lot of factors there, was right around $550,000. Before that, it was around $250,000. Before that, it was around $110,000. So
it's half.
So every time we double that number, we see that wages and earners aren't keeping up with that value. And then we'll start to see a decline where it's just absolutely unaffordable for the majority of Californians. But right now, we don't see that, especially with the social media movement, all of these live streamers and everybody making a ton of money off the internet. They're able to buy these homes, but they're still looking for that deal, right? People are savvy to real estate now. They're watching all these HGTV shows. They want a deal. And everybody that's been going to Home Depot during COVID and bought a new kitchen and did all these new floors, they want to get their money back. So again, they're button heads right now. I don't see a decline anytime soon, but I do see a pickup in the market if rates drop. So we'll leave it up to Jerome Powell to make a move.
And I was reading what Donald Trump said about because I'm based in Ireland, and so the European Central Bank is our central bank. And they, in the time that Jerome Powell has been thinking about dropping rates, we've had 10 interest rate drops. And so we're 2.5% lower now than we were when these changes started to take place. So that's a big drop, a big difference between the US and the European market.
Yeah, absolutely. So question, Gavin, have you seen an increase in buyers since rates have dropped?
Well, it's funny. It's very hard to give an accurate answer around Ireland because we have got the most acute housing crisis anywhere in the world. We have got, 2008, the Irish economy did not recover from 2008 for 6 years. And in that period of time, construction went virtually to zero. And in order for a market to maintain its ability to house the population, you need something in the region of 50,000 homes a year. And we were building zero. And we now have this structural inability to meet the demand. And so we're building because of our construction industry, it was completely decimated. We're building about 1/3 of the demand that exists. So we don't, personally, I don't think we're ever going to be able to meet the demand. I just don't think it's possible, because you can't bring enough construction workers into the country to actually create the housing that is needed. So it's really, I mean, rents have gone up by 40% since COVID, and just as an example. And so whereas we have definitely seen an increase, but I think we probably would have seen that anyway because of the way the market is. So I suppose not a clear answer to your question, but just gives you an idea of why. Yeah, some of the supply and demand. That's one of the reasons why. And it's funny, I used the fires, the LA fires, as an example in a podcast a few weeks back, and I was just saying, like, supply and demand. You can imagine now that Pacific Palisades and places where I think is something like 10,000 homes burned down. You can just imagine the economics in play. You've got contractors that would normally build, a couple of houses a year, now suddenly being asked to quote for 50 jobs maybe. And so what's going to happen? Prices are going to go up. And then it's going to be how many builders are there to service all of the demand? Like, there's just simply not going to be. And that's going to in itself drive up prices, drive up rents, which you mentioned, because people just, what are they going to do? Live out of a hotel for the next couple of years while they're waiting for a builder to become free? So I think it's going to be, in a sense, you mentioned the word gouging. There's always a lot of gouging in that kind of situation. But the market will do what the market does. And so we'll have to wait and see.
Yeah. There's been a lot of talk about just the financial and economic impact of the fires, and the market was a bit stagnant, but look at all of the wheels in motion right now. Like you said, contractors coming in, just the remediation work of cleaning up these job sites has been a boom. Just these contractors can't handle the amount of jobs, so they're bringing people from out of state. The materials, now there's where tariffs come into play, because we're sourcing a lot of these materials from China and Canada, a lot of lumber but you know what, we have these materials here as well, but it's also having us look at other areas where there's not as heavy of tariffs, like Vietnam. We're able to source a lot of the materials that we would get from China from places like that, Cambodia. These are great resources that, are able to, produce great products for us. So, we have to be
nimble.
We have to be able to pivot. We have to be able to pivot. And right now, Southern California has seen a huge financial, impact right now. This is great for the economy. I mean, it was a horrific, event, but you know what? It did get a lot of things moving that weren't moving, and we'll see this movement for years to come.
Well, it's like they say, every cloud has a silver lining, and it's there is most definitely some very unfortunate people that were very badly impacted by this. But the other side of it is that this is going to drive an economic boom like probably nobody's seen in years. And there's always winners and losers in every transaction. I mean, somebody overpays and somebody, gets a deal. So we'll see.
Gentrification as well. There's a lot of people that lost their home that are not able to invest or rebuild, and so they're forced to move out. And somebody with a higher economic class will be able to move in there and kind of replace that. So this is a generational movement right here.
It's a little bit like if you consider what COVID has done to the office market, the LA fires are going to have some sort of a dramatic cultural shift to California as well. It's going to change Los Angeles in a substantial way. Whether time will tell whether it's a good or a bad change, but I imagine it'll be probably good. The fact that you'll have a huge boom, and then lots and lots of new homes built in a short space of time.
Yeah,
so
absolutely. So the people that can't afford the Pacific Palisades anymore are going to move to, Los Angeles, East Los Angeles, and move all the people that were, barely hanging on in East Los Angeles out of East Los Angeles and up to the high desert. And so, it's just cycling.
Boom there. Yeah.
What was that?
That'll probably cause a boom there.
Oh yeah, absolutely, 100%. So I mean, it is an economic movement across all classes, and you know, it's good for real estate. And this is not something that is relatively new. This cycle has been happening for many years.
Yeah, yeah. Tell us about the business that you've built, Bo.
Oh, so well, glad you asked, Gavin. So I created a platform for people to invest in real estate, primarily luxury real estate, and it doesn't depend on your economic class. So we call it the democratization of real estate investing. So basically, we created an app where we are able to source real estate investments. A lot of people call them house flipping. We call them restorations or renovations. But we'll find a distressed property brought to us by an agent throughout the United States. We're actually global. We're flipping houses in Greece as well. Oh, wow. So a distressed property is brought to us. It becomes fully vetted by our underwriting team, goes onto our application, and one of our 6,000 investors, actually one to up to 500. We had 500 on the Malibu house owned by Kanye West. 1 to 500 people are able to invest in that property fractionally and make it affordable. So what was extremely expensive for one person to do becomes affordable when we all do it together. And then, so we buy that home, we start renovations, we provide updates weekly to the investors so they know exactly what their investment's doing. We just got a new roof, we got new windows, new flooring, new paint. So they're able to follow along in the restoration process. Right. And then when the house is sold, Bellwood is then able to pay out shares of that profit to our investors. And so they get to participate in what they are watching on HGTV, which is the most popular form of investment, but it's so expensive. They're actually now able to participate in that through Bellwood Investments.
So, and I'll just ask you from the point of view, it sounds to me like what you've done is digitize the syndication process, or am I reading that incorrectly?
Exactly. Yeah, we have absolutely done that. Digitized and streamlined it. Yep.
Yeah, I mean, I like the idea of an app. I was in the process of downloading your app when we were going online here. Mm-hmm. And when I opened up your website, I saw, download the app, and I was like, oh, wow, that's, at the very least, it's novel, the idea that you have an app to make the investment. Yeah. So I can see how it's a little bit like these apps for investing and stuff like that. You download it onto your phone, next you can buy and sell shares. So you're kind of going down that road.
Yeah, exactly. We refer to ourselves as the Robin Hood of real estate. So Robin Hood has fractionalized the stock market, and we have fractionalized the real estate market.
Yeah, that's really interesting. And tell me this, in terms of like the ownership and splitting it up and stuff like that, one of the terms that I've heard about is tokenization, where you're kind of bringing in, using the intranet now, and a little bit like crypto, I guess, or something like that. Do you do any of that stuff, or is that still the traditional, the company, you're issuing shares and things like that?
Yeah, so we do take cryptocurrency as a form of investment. So that is something that we do offer. But what we do is we secure everybody's investment with what's known as a deed of trust. So, I call it the pink slip. Here in the United States, if you want to buy a car and you can't afford it, you got to get a loan. And if you buy that car, you get a loan from a bank, you can't sell that car unless you have that pink slip. And in order to get that pink slip, you need to pay off the bank. Each of our investors gets a deed of trust, or what I refer to as a pink slip, on that home. Now, when that home is sold, those pink slips have to be paid back. That deed of trust has to be paid back. And then once it's paid back, then we get to split the profit. So we've securitized our investors' money with this deed of trust.
Okay, I see. So that's really interesting. So basically, it's a loan and then a share of the profit.
Yeah, exactly. So what we've created are small private money lenders. Okay, so you and I will understand this. Sometimes the listeners won't get this, but yes, for you and I, it is their private money lenders. And instead of getting a simple interest rate return or points and fees, what they're entitled to is half the profit. So Bellwood takes half, and then our investors get half the profit.
Nice. Yeah. That's a really interesting way to do it. Well, that's what's so interesting. I just love when people bring innovation to what is otherwise kind of traditional investment. And you can set up a company and we syndicate and stuff like that. And you won't get anyone's interest. But when you go and create a little bit of innovation and you put a couple of layers of digitization in front, suddenly it attracts a much wider audience.
Yeah, you can invest in real estate from the comfort of your own couch.
Brilliant. Well, and tell me this, Bo. I'm going to go back a little bit, and we mentioned your the speed bump in your career, and we don't need to dwell on it. But you did spend some time behind bars, and so I'd love to just go into how did that impact you from the point of view of going out there and starting a business afterwards. Like, did you find that was a hurdle, or did you find that it actually strengthened your hand in terms of dealing with what you had to build?
Well, I'm glad you brought that up as far as strength, Gavin. It provided a tremendous amount of strength because you don't appreciate the top unless you know what the bottom feels like. And yeah, behind bars is the bottom. For me, at least, it was. And it left me with only one direction to go, and that was forward. And I had a tremendous amount of faith, and still do have a tremendous amount of faith. So, leaning on my faith, leaning on my goals and benchmarks, and with only one choice but to move forward, gave me the strength to achieve what we've done today, which is build the number one fractional real estate platform in the world right now. So it's until you understand the heartache, you really can't appreciate the wins.
Well, I think I think it's really important for people to hear this, because I know there are people listening who have been through some sort of a setback, and it may not be as dramatic as going to prison or something like that. It may simply be that they were made bankrupt or something like that, and they will use that as kind of an obstacle in their head that'll hold them back for years and years and years. And the reality is that there's been plenty of people who've been made bankrupt over time, and they didn't let it impact them. And you just have to move forward. As you say, set yourself benchmarks and just move forward.
Yeah. It really, a lot of people are able to use impacts in their life as an excuse, to be quite frank. It's a lot easier to stay at the bottom. It's I refer to it as the bottom of a well. It's cold, it's shady, it's murky. You're down there with people that don't expect much of you. It's easy. You don't have to do much. And you can use that as an excuse. You can wallow around in it. And what's hard is moving forward or climbing up out of that well and going towards the light. And so it really, it depends on the person. You can use it as a means of strength and motivation, or you can use it as something to hang your hat on as to why you're not going to achieve your goals. And I'm not lazy. I take I take the hard route, and sometimes it's definitely not easy, right, Gavin? You have to do what others won't do, and that's what sets entrepreneurs aside. Is you have to be able to work hard and put your misgivings aside and focus on what your true goals are, and that's what I've done.
And so, tell us, Bo. I mean, your first year out, when you're sort of trying to sort of restart and stuff like that, what was it like for you? Like, I mean, paint us a picture of the kind of the strategies that you used to kind of drive yourself forward and achieve the goals that you've clearly achieved.
Sure. So it started, before I left, right? I wanted to hit the ground running, and it wasn't just mentally. It was, I had to physically write it down on paper and visualize it. And when I got home, I had a plan. I had a plan of action, and I implemented it. But it wasn't easy. It wasn't like I was just able to start, where I'm at right now. I literally had to put together on one flip. It was a house. It was one that wasn't being touched. It was half of it was burnt down. I knew I was going to have to do the work myself because there was nobody that I could hire. I didn't have the money to do it. I was negative $500,000. Wow. And so I literally had to just put these small pieces together and use my own personal hands to actually do the work. I was swinging a hammer. Because before I left, Gavin, I was in a beautiful office. I had many employees. I was, had many millions of dollars worth of real estate going, and then it was all gone instantly. Wow. But I knew what it took. I knew what it took, and I knew it'd be hard work, and that's what I did. So I flipped that first house. I proved the process again, and then my investors that had worked with me in the past said, "Oh, okay, he's back. He's not going to just hang around in the bottom of the well and be a loser or whatever. He's back in action." And so I was able to gain the trust and faith of previous investors, and it started one by one.
Brilliant. And tell me this: how long after that first deal where you're rolling up your sleeves until you're in the process of buying Kanye West's house?
Mm-hmm. So I got home in 2018, and like I said, I hit the ground running, and tirelessly with goals in mind, because I was doing this form of real estate investments before I had gone, but I knew that I was going to be dealing with some difficulties and some hurdles that I wanted to overcome. But I knew that I had something special. So what I did was just put together goals and benchmarks. That's what I have to do. 2-year goals, 5-year benchmarks, and I stuck by those. So it started with just that first house, then buying 3, then buying 6, then having 10 investors, then having 50 investors, hiring new employees, hiring new contractors, just really working tirelessly with the method and the plan that I had already designed and previously implemented. But now I had a sense of urgency, Gavin. I knew that I didn't have as much time. I had already lost 3.5 years of my life. We're not getting any younger. If I'm going to create the number one platform for investing in real estate the world has ever seen, that there's no time to lounge around and sleep in or take off early from work. So it's just been hard work. It's been implementation and execution.
Yeah, wow. And tell us, so let's go to the big, I'm sure people are fascinated to hear that you bought Kanye West's house. So first of all, let's describe, I know the house because I studied, as I mentioned, I studied architecture. And so Tato Ando is one of these Japanese kind of very, very modern architects where it's all very clean lines, concrete, glass. And this was in Malibu, and then Kanye West bought it and decided, let's strip it out and take all of the, I read that he took out all the plumbing and all the electrical and then ripped out stuff, and then changed his mind and abandoned the house, and you picked it up as a shell essentially. So tell us the story. I'm curious.
So I actually got it from, firsthand from the contractor that was working with Kanye. And so what he wanted to do was to completely remove this house from the necessity of public utilities, no electricity, no plumbing. Now, as you know, Ando's builds are all concrete. It can withstand a tsunami, withstand earthquakes, and nothing will happen to this house. It is built so strongly. And Kanye West appreciated that. So what he did was he gutted everything out of that home and made it basically an end of days bunker. And what we have here are city guidelines that you really can't navigate around. And the city of Malibu is very strict with what you do to the homes in their city. And especially the Coastal Commission, this home is directly on the beach. And what he was doing was in violation of so many different rules.
Codes.
Yep, absolutely, the codes. So what happened was he was red tagged. And Kanye, being who Kanye is, hired a constitutional attorney to come with him down to the city of Malibu. And he walked through that front door with his attorney in tow. And they basically told him to take him and his attorney to get the heck out of there. And, what he has, to say doesn't matter. And knowing Malibu, Kanye West is somewhat influential, but they're dealing with sheiks and princes, buying $200 million homes. And this is a beautiful home. It was originally for sale for $75 million. He bought it for $57, but it wasn't like they were dealing with the president of the United States or some sheik from the United Arab Emirates or something like that. Yeah. So he had to tuck tail and get out of there. And, he's not really in the real estate business. And if you've followed along with what he's done to real estate in the past, he's not a good steward of real estate. Yeah. So I was able to see that he was in a bit of a predicament. in that he wanted to exit it. So he listed this property, Gavin, for $54 million, a $3 million loss. And then just a month later, it was about a month and a half later, he went from 54 to 39 million. And that's what caught my attention. Why would you go from 54 to 39 if you were in a financial crisis?
Yes.
And he was at the time. He's survived that and is doing fairly well from what I understand. But at the time, he was liquidating a lot of assets. So when I saw the drop from 54 to 39, I smelled what I say is blood in the water. And I said, okay, cool. I reached out to Jason Oppenheim. And I said, hey, what's going on with this deal? And he said, just write us an offer. And I said, well, it's definitely going to be about half of what he's asking. He said, just send it over. So I did. It was $21 million. We were able to slide this in with one of the many contracts he was executing. He was in Italy at the time with Bianca, his wife, and they were liquidating a bunch of assets, cars, jewelry, real estate. And so we were able to slide this contract in there, and it was executed. And wow. And we were able to take down the property at a record win. And
21.
And so we win.
Fantastic. And so tell us, what have you done to the property? I mean, you mentioned to me, but we weren't online yet. So tell us,
sure.
What have you done to the property? And you're now under contract to sell it.
Yeah, so we did plumbing, electrical, some framing. We hired the original builders, Marmol Radsener, who have built a few different Ondo properties. So it has been just a restoration process. We wanted to use the original people because they know exactly where everything goes. They've done it before. Yeah. They didn't have to recreate the wheel. So that's what we did. We got it all lined up and started the work, and now we are in escrow to sell it to a developer who's going to take it the rest of the way. We made our investors a tremendous return in a short period of time, and we're able to walk away and look at other properties, which there's one property we have our eyes on right now, and that's P. Diddy's property in Bel Air.
Oh, wow, yeah.
Yeah,
he's another
we're
man in a bit of trouble at the moment, yeah.
Yep. So if he's found guilty, we'll definitely be able to take that one down for the price that we want. If he's not, then I think he's going to keep it. So we'll see how that goes.
Are you at liberty to say the price that you achieved in flipping Kanye's house?
Yeah, $30 million.
Wow. Okay. So you've made a tidy profit for your investors. That's a great job. And how many do you say 500 individual investors in that particular deal?
Yeah. We had 500 investors on that property, ranging from $1,000 investment all the way up to $1.1 million in investment per person.
And is it all? You do basically a cash purchase. You don't use any senior debt or anything like that, do you? Yeah.
So what we do with our method is we do secure either a capital markets account or a family office, and they'll take down the lion's share of this. Okay. But what they want is interest and points and fees. So leaving 100% of the profit to us. So that's what we did in this circumstance. We secured an $18 million first mortgage, and then raise the remaining through our crowdfunding platform. And so that's typically how we run our operation.
That's really, it's a novel way to go about it. Okay. And
thank you.
And in terms of the roadmap for the future, where do you see yourself taking this? You mentioned that you're already buying something in Greece, did you say?
Yes, Greece. So this is a global product, Gavin. What we're doing is not just attractive for people in the United States. This is attractive for people around the world. Now, you mentioning that there's a housing crisis in Ireland kind of piqued my interest, right? How can I get involved with that, right? Because if I'm able to share this story that you shared with me about the lack of housing and the need for it, well then, and a 40% uptick in rental costs, well then, that's attractive to some of our investors here in Southern California. They would love to hear about that. And I'm sure there's some people in Ireland that would love to invest in a Malibu property once owned by Kanye West, or in Beverly Hills. I'm looking at potentially even picking up Elizabeth Taylor's property in Beverly Hills as well. She had a beautiful property out there. It's off market. So there's some really attractive opportunities that people would love to participate in that they would have never have been able to participate in had they not found the Bellwood Investor app. Yeah. So this is a global opportunity. It's not just for the United States, but everybody.
And you know what I think is particularly interesting, Bo, is that if you think about somebody looking at an app and buying a property and sort of being able to say, oh, I bought, a share of that ordinary house down the road, that's not very interesting. But if you were to say, look, I have a share of Kanye West's house, I can imagine that would actually be quite interesting. And being able to show somebody photographs and videos and all that kind of stuff, showing, look, this is the property that I'm a fractional owner of. So I think it's a great idea. So congratulations on coming up with a great idea.
Yeah, thank you. We're actually taking it a step further, Gavin, where we are giving our investors, and our V2 of our app is coming out, we're giving the investors the opportunity to vote on finishes. So we'll give them a roadmap, right? So just for instance, wall colors. Wall colors, we know that we want it to be white. So we will give, let's say, 100 investors the opportunity to vote for 4 variations of white. White sand, white linen, white clouds, white stone, all fall within our designer's roadmap of what we want this home to look like. But the investor using the app is able to vote, well, I like the white linen colored walls. I like the brushed nickel, fixtures. I like the red front door, these types of things. So they can actually participate in some of the fun activities that they're watching on HGTV because, everybody's watching that. Everybody wants to participate, but they just don't have the money, the experience, or the opportunity to do that.
And it's democratizing the process and
it's democratizing the process. And one more aspect of this, Gavin, it's not just for the luxury real estate. Could you imagine, in your own neighborhood, you find a distressed property that everybody knows is distressed. The grass is overgrown, the windows are broken. And you could say, you know what, that's a Bellwood home. You guys can put that on the app. We can find out who the owner is, offer them a cash deal, and now the community is getting together, investing in their own property or in their own community, making money at it, and improving the distressed property. So it's a global impact.
Yeah, that's brilliant. Well, Bo, it's been a great conversation. I'd love to talk more, but we're running out of time.
Sure.
If anyone would like to learn more about you and your app and stuff like that, tell us where can we find you?
Well, for one, you can look us up on our website, which is bellwoodinvestments.com. You can also download our app, Bellwood Investor App, and this is in the Google and Apple stores. I also have a book out that explains, kind of what happened with me, and that is called From Fractured to Fractions, and you can find that on Amazon. I would love to hear from any of your listeners and or viewers, and we'd like to get involved with everybody.
Well, I'll definitely put a couple of those in the show notes, links and stuff like that. Tell me, Bo, final question I like to ask my guests is, if you were to go back now to that young 18-year-old coming out of university or coming out of school or whatever, what advice, knowing what you know now, what advice would you give to that young man?
Ooh, so many things. I would say don't sweat the small stuff, okay? And by that, Gavin, I mean we're all going to encounter certain hurdles. Mine was what you had referred to being behind bars. Somebody might encounter a bankruptcy or a death in the family. Don't let that be your excuse for staying in the murk. Don't let that be your excuse to not be successful. Use that as strength. Don't use that as an excuse. Don't
sweat it, yeah. Yeah, it's great advice. All right, Bo Belmont, fantastic conversation. Really enjoyed it. Wishing you the very best of luck with everything. And if you're ever in Ireland, look me up and I'll show you some properties that you can buy with your investment app.
We'll put it on the app. I appreciate that, Gavin. I would love to come out there and visit you. Thank you.
All right, guys, I hope you enjoyed that conversation with Bo. I'm going to put the links that he mentioned down below. You should go and check out his app. And if you go onto his LinkedIn page, he's got a lot of videos. And I learned from looking at those videos that he's bought the property next door to Rihanna. He's bought the property that used to belong to, I think it was Bill Withers, various Hollywood stars. So all of these Hollywood stars and the Hollywood Hills, that's the kind of property deals that he's dealing in. So very interesting. And you can have a piece of it with his app, Bellwood Investments. So guys, look for the links down below and I will see you in the next one.